Ideanomics Stock Analysis. Okay guys, in this video we're going to talk about Ideanomics, ticker symbol IDEX, and this stock is up huge on some ridiculous volume. So the stock was trading at a super high level, and it's up to actually $3 as I'm recording this video. So the funny thing is that looking at a year-to-date chart here, the stock was just at $1, and they just recently announced some news that they increased the stake in a company that produces electric tractors. So this is the first time I've ever heard of anything about electric tractors. So let's get right into it, guys. Okay, so here we are on the Ideanomics website, and they talk about increasing their stake in e-tractor company called Solectrac. So basically, the whole point of this is that electric tractors are poised to disrupt the $75 billion global agricultural tractor industry, and this company just increased their stake to around 24%. So the text is kind of light here, guys, but I hope you can read it. So basically it says they added up through a follow-up investment of 1.3 million, and they've increased their ownership to 24%, which will reduce approximately 22% post money once the additional third-party investment is finalized. So here's a quick quote from the CEO. It says, "We are very pleased to increase our investment in Steve and the Solectrac team, and we welcome the investment interest from funds looking to deploy capital in the clean energy and EV sector. We believe Solectrac has enormous potential, and given the uptick in both product inquiries and investment interest they are seeing, we exercise our rights to increase our stake so we can help Solectrac scale to meet anticipated market demand." So basically about this company, Solectrac, they develop, assemble, and distribute 100% battery-powered electric tractors. So this is actually brilliant because while everyone's talking about electric buses, electric cars, electric three-wheeled cars, all different types of vehicles, no one's really mentioned tractors. And that's something that I kind of missed the boat on that too. I didn't really think about needing to replace tractors, but tractors do have lots of carbon emissions. So I think it's a really advantageous idea for Ideanomics to increase their stake in this company. They almost own a quarter of it. And, hopefully I took a look at the website, so as you guys could see here. And here's a kind of a picture of the electric tractor. So, apparently this is a huge industry. There's lots of farmers that are going clean energy with their vehicles as well. So that's probably one of the reasons why the stock went up so much. So now let's talk a little bit more about Ideanomics in general, and let's take a look at their latest quarterly numbers, and then I'm going to go over some technical analysis to give you guys my future price target. So Ideanomics is a little bit different from some of the other stocks I've mentioned, like RC Moto, Solo, Fisker, and things like that. They're not developing their own electric vehicles. They're kind of earning fees to generate revenue basically on group discounts. So the company has headquarters in United States and in China. So as you can take a look here, they're basically I would say not really like eBay, but they're kind of giving group sellers, usually taxi and ride sharing companies in China, big discounts to kind of purchase the vehicles through them. So that's how they're generating revenue. So as you can see here, they talk more about the global opportunity, just massive across the board. Just any type of vehicle you can think of has to be electrified. So that's where this company is positioning themselves. So if we take a look here further, we can take a look at their business model. It's a little bit confusing, but I'm going to try my best to explain it. I really haven't seen any electric company with a business model like this. So basically it says their sales to assist fleet operators attain their choice of EV models suitable for their budget. And then it says their mobile energy global group generates fees on group sales. So they're looking to sell vehicles in bulk. And then they also provide financing. So it says they provide partners enable fleet operators to purchase EVs without the large cash deposit. And then they earn a fee for facilitating this. And then they also make money through charging. So it says earns fees from selling energy used to both charge commercial and passenger vehicles through prepaid and wholesale electricity. So a little bit different, guys. This isn't like a company that's actually producing its own vehicles and making sales and stuff like that. They're kind of just piggybacking off of this this new EV revolution. And I think in the future this company is probably going to become more of a holdings type company, perhaps maybe become a kind of like an EV conglomerate. They're constantly, looks like this increasing the stake in Solectrac. Perhaps they find another company as well, because there's lots of these smaller little companies. I mentioned in an earlier video IRO. There's actually another stock that I'm going to mention coming up soon. It's called Adomani. That's actually an OTC stock. That stock is booming. So there's lots of these little smaller electric companies that are kind of moving up. And I think that's where Ideanomics, I think that's kind of how they're using their business model to buy stakes in these companies and kind of just ride this wave. Okay, so now we'll give a little bit of background on how this company is basically generating money and buying stakes in other companies. So now let's go over the financials, because we need to take a look at the revenue, because the stock price has soared through the roof. And the last quarterly revenue was about $10 million, which was a 2.3 times increase compared to Q2 2020. So this company saw a massive increase in revenue, and they finished the Q3 with around 27.6 million, and most of the growth was in the taxi and ride sharing segment, which they're basically selling cars to China and mostly Asia. So as you can see here, it says we reported our third consecutive quarter of mobile energy global revenue growth, and our pipelines give us confidence we can maintain this momentum through our product and service offerings and global footprint, said Alf Poor, CEO. So it says the mobile energy group division of China, Tree Electric in Malaysia, and Medici Motor and Solectrac in US are progressing towards objectives for the remainder of 2020, 2021 and beyond. Strong growth in our taxi ride sharing business continuing. We are beginning to bring in other revenues in Q4, including activities in the bus segment of our business. So, this company is basically trading like a lot of these other car companies. There's a huge demand for electric cars. You guys are wondering why these stocks are soaring. It's simply because with the whole pandemic situation, a lot of people are shying away from public transportation. A lot of people are moving from the big city to the suburbs and to the countryside. And when you kind of move out of these big cities, you need transportation. You need your own personal transportation. So that's one of the reasons why you're seeing this absolute just skyrocketing market right now. This is one of the hottest markets I've seen when it comes to EV stocks. It seems like almost every stock is popping. So guys, let's just talk a little bit more about kind of their recent deliveries that they did in October, and then I'm gonna give you guys technical analysis and get to my price target. So as you can see here, here's kind of the units that they delivered in October. They delivered around 102 units, which are mostly taxi and ride sharing vehicles, and most of these sales are in China. So that's basically what this company is going to do. They're going to basically invest in other companies like Solectrac in America, and they're going to be delivering a lot of cars to China. And since China is the largest EV market, I think there's a lot of opportunity there. Okay, so now we went a bit over the financials and kind of their recent deliveries. Let's take a look at some technical analysis. Okay, so to head over to TradingView to do my technical analysis. As you can see here, Ideanomics, this stock has basically traded up on huge volume. So as you can see, there was a massive pop for this stock, and I mentioned it in a previous video back when it was around $3.29 or so back in June. And as you can see here, the volume was way up, 362 million shares, and now here we go again. The volume is way up again at 281 million. So basically what we have here is that, after the stock sold off, right, and then the stock came back down, there was more accumulation and more accumulation, and now it looks like, as of it is in after hours, it's around 315. So if it passes this previous resistance of around 330, the stock is going to break out. And one of the reasons I think it's going to break out is because the company continues to increase their revenue. So a lot of people are waking up to the fact that there's lots of smaller cap EV stocks like Ideanomics. So obviously you have stocks like NIO, you have stocks like Li Auto, Tesla, and things like that. And these stocks these are large cap stocks, right? They're traded at massive valuations. But there's a lot of these smaller companies that are benefiting from the wave too. So there's an old saying, it says a rising tide lifts all boats. So Tesla was kind of the first stock to pop. That stock went crazy earlier this year and kind of in the summer, and then now these stocks are following suit. So basically, I think the best way to trade this stock would be, obviously it would have been best to buy it at around 88 cents, but if it could break through this resistance later this week, and it could go to $4 or $5 easily. So if we just take a look at the current market cap, the current market cap is $640 million. So the company did $10 million in revenue in Q3. So obviously it's increasing, but if we just kind of just generally extrapolated that revenue over 4 quarters, that would give it around a conservative revenue of like 30 to 40 million per year. And at a 640 million market cap, you're paying about 10 to 12 times, no, a little bit more than that. You're paying about 10 to 15 times revenue. So that's not an outrageous price to pay for a growth company like this. A lot of things, I think we're going to see a much bigger boost in these stocks in 2021. This is just the beginning. I'm going to say this again, for a lot of people that think it's too late to buy these stocks, this is the first inning. A lot of people are not even aware of kind of the electrification, and it's the number of electric vehicles sold is such a small percentage of overall vehicles, maybe only 3 to 4%. So I think once as the years go on and we start to see, electric vehicles go from like 4% to 5% to 6% to 7%, then you're really going to see these stock prices rise now. So it's not too late to get into any of these stocks. Perhaps the only stock that is kind of at a ridiculous price is Tesla, but all of these other electric stocks, I think they have a lot more room to run. So I'm going to give you guys my future price target. So as we know, before companies are dealing or generating a lot of profits, they're going to trade basically on revenue. And the fact that this company is only around $640 million, I would say $1 billion would be an absolute kind of expensive price tag to pay for a company like this that's only generating like $10 million a quarter. But that increased stake in Solectrac obviously brought a lot of new interest and a new attraction to the company. So I would say a conservative price target for the short term. If the stock breaks through that previous resistance, you can kind of use a visualization of a cup, and if it forms the second side of the cup, it could break out to $4 or $5. So there's a couple of ways you can play this. The best way, the overall way to play this, the one that has the least emotions involved, is to just buy a long position. So you can just buy long, hold this stock for a while. It's trading under $1 billion. It's still a small cap stock. It has the potential to grow in a much bigger company in the future. If this Solectrac investment pays off, that alone could be worth around $500 to $1 billion. So basically you're getting two companies. You're getting a company that's well invested in Solectrac, and then you're getting a company that's doing their own deliveries using group sales. So it's like icing on the cake, I would say. So you could buy a long position, obviously, and hold at $3. We've seen a lot of these electric stocks started at around $1, $2, $3. NIO was $2 at one time. Workhorse was $1 or so at one time. Iro was $1 at one time. Solo was $1 at one time. So there's so many other electric vehicle stocks that are trading at just super high prices now that started at this same level. So I wouldn't say, oh, it's already up too much, it can't go much higher. Well, obviously, that's been proven wrong several times, as I just mentioned some of these stocks. And so you guys can actually check out these charts for yourself. And it's amazing how some of these companies started as basically just cheap little penny stocks and have grown so fast. And this is just the first inning of electric vehicle stocks. The second way to play this is stock options. So as you can see here, I'm on my Robinhood account. You can just open stock options. And as you can see right here, the best way to play this market would be buy calls. Now, there's a couple of ways you can play this. You can just buy some calls. If you're more conservative, it's probably best to buy calls that are, I would say, in the money. Or if you're really aggressive and you think that the stock is going to go much higher, you can buy some out of the money calls. And I've seen some of these plays do really, really well recently. Probably the most recent one I saw was buying XPeng. If you bought out of the money calls for XPeng, you could have made a lot of money. So there's definitely more risk if you buy these calls out of the money. Just realize that these stocks have been kind of just shooting straight up. And, that's not going to last forever. Yes, I think a conservative price target would be around $5 by the end of the year. There's still a lot of upside in this stock. And it's actually possible that it could hit $5 and then $10. But there's definitely going to need to be some more catalyst to get this stock to kind of ramp past $5. Probably when they announce deliveries for November and December in their Q4 quarterly report, if it's the good numbers, probably going to see this stock head towards $10 by probably sometime in January or something like that. So that's it for now, guys. I hope you enjoyed this analysis of Ideanomics. This is another one of the small cap stocks that are moving really fast. And guys, if you're looking to maximize your returns, you want to buy stocks like Tesla. Stocks like Tesla are obviously a great hold, but you're going to want to look for these smaller to mid cap companies that you can kind of get in early. At one point, Tesla traded at $2 to $3. So, you're going to make the most return on your investment by buying in early, buying some of these smaller companies that can grow much larger. And I think Ideanomics definitely fits the bill. So I'm definitely looking to enter a position into this company. Obviously I wish I'd bought it at under $1, but I still think there's a lot of upside at, a $600 million market cap. There's just a lot of more upside in the future. So that's it for now, guys. If you enjoyed this video, please smash the like button. And if you'd like to see more videos on kind of EV stocks and other stocks that are going to make you a lot of money, please subscribe to my channel. So that's it until next time, guys. Take care.